Ladies and gentlemen, it's me, NYSE Einstein, from the floor of New York Stock Exchange inside Versthof. Second to last day before the end of June. This market has seen wild swings today. Always what I tell you is, when markets stay steady and trade in tight ranges for a while, something will be the catalyst to make them either go higher as they're building a foundation or to sell off, and that's what today brought. Came in the market, seemed okay, seemed fine, seemed whatnot. Tech started to sell off. Tech started to break down. It wasn't in oil, it wasn't gold. Perhaps some bonds, right? They were buying some bonds. But what seemed significant was that the tech sector, which has been I know what happened. Forget about it. Stress test yesterday after the close for the banks, right? Came back solid. Banks have been underperforming lately, as have energies. Stress tests came back in. They were strong. There was huge to buy in the banks this morning. Okay? So how does hedge funds, how do institutions finance their repurchase of bank stocks when the stress test comes back positive? Liquidating the tech, right? Sell the winners, buy the losers, finance the deal, giddy up, fantastico. So what ended up happening? Money going into the banks this morning, they opened up. Tech started to break. Once that train starts leaving the station, and people are convinced that's the way to go, and people see the other stocks rallying, they start to trade the finances. They sell the tech sector. They sold it hard. We were down 257 points at one time. The S&P was down 34 points at one time. Inside Versthof, kicking it. Okay? We sold off hard, but amazing, with the market down 250 points, oil and energy stocks stayed stable, stayed flush. In fact, we're slightly in the green. So that completely confirmed what we're talking about. Liquidating tech stocks which had been winners, which had been successional winners over the last 3 to 4 months. Profits being taken to finance the purchase of banks which have been okay but have underperformed the market. That's what happened here today, and that was significant. Okay, we broke through the 50-day on the S&P. That triggered some buy program. It fairly seems that way. We sort of double bottomed on the Dow and the S&P, down 257, down 34 in the S&P and the Dow, and they rallied them back. We rallied from down 257 to down only about 140. They cut the losses in half on the S&P, on the Dow, and in a lot of stocks, with oil basically not even budging. So that was just a completely contango. They were not involved in the same trade, although they were significantly related to each other, okay? We ended up the market closing down 168 points. There was a little flush out on the close, but for me, I found it significant, the sell-off, the lack of follow-through on the sell-off when they took their foot off the gas on the sell side in tech, and they started to buy the banks in the market itself, and the market rallied back. It seemed to me that, you know what, there may not be so much follow-through on the sell side, that there are buyers in the wings, that there are people sitting around with shopping lists waiting to get bargains. This market's trading at all-time highs here. There are people who are underinvested. We're coming to the end of the quarter, end of the half. We're going into the third quarter of the year. People need to be involved, and they're waiting for bargains, and there are plenty of people sitting around the sidelines waiting for that. Market closed down 169. Spiders off half as much as they were at one point during the day, down 18.5. Russell actually not that bad, down 9 points. So for a market that closed down this big, that wasn't bad. So they were selling the Dow and the S&P. They were not selling the Russell small caps. Dollar down, bonds up, market fine. In a down day, this market holds firm. I'm surprised at that. We did have the IPO of Blue Apron, one of the first food companies in the space of delivering pre-made foods, pre-prepared foods, right? It had been priced at $17, got lowered down to $10, opened at $10, and did in fact rally. It's an odd space. You have $800 million in revenues, no profits. You've got millions of users, no profits. The logistics of delivering food that is prepared is a wonderful idea, but I don't know how they're going to monetize it. Stock rallied $1, came back and closed where it was, in fact, trading lower pre-market. It's a strange model. We've seen that with Snap, with Facebook and whatnot, that just having millions and millions of users does not guarantee profits. Snapchat hasn't turned it around yet. Facebook did an amazing job monetizing millions and billions of users. Twitter has not. This is the first in the food space. The food space has been in play. Amazon is looming. You never know what that's going to happen. Maybe they are going to start opening stores and doing the same business. It is a crowded space. There's Plated. There are a number of others. So keep your eyes on the prize. NYSE Einstein out for the day tomorrow. End of the quarter, end of the half. Big day. I love you.